Welcome back to Trading 360. I'm Nicole Penelides, live at the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts as he does every day. And here to take us through the trades, Alan Nuckman, Chief Market Strategist of BullseyeOption.com. Thank you, gentlemen, for being here on this Thursday. So Alan Nuckman, we'll start with Las Vegas Sands at $42 today. Why is this one on your radar? Las Vegas Sands.
Well, the first thing I want to point out is that we had a test and reject. To use Ben's words, he taught me long ago to watch for test and reject. And we've seen that in oil, and we've now seen that in the S&P. Need to build on that, that's for sure. But we've got the interest rates. Bad news is turning into good news for rates in the fact that rates are declining when you look at the futures markets. And if you get out to 2024, they're back down to 3.5% according to the futures. All right, so let's talk about LVS. Let's talk about Las Vegas Sands. I'm not a gambler. I'm a probability guy. But this is a stock that's been strong. So this stock here is trading between 35 and 40 for the last 2 months, and it's breaking out to the upside here. It's been between 30 and 40 since March. That target's 50, so there's still a lot of upside. I'm looking for the in-the-money option, as I do my stock substitution strategy, the 35 call, and that's trading for about 10.5 or so, and it's deep in the money. So the expiration break even is just a little bit away, $1 or $2 away, with 3 months of time for this stock to continue to surge.
I see. All right. So feeling a little bit bullish here on Las Vegas. And looking good there, by the way, Alan, at the CBOE today. I like the action in the background. We got everybody covered from all these exchanges. This is nice.
We're back in business. We're back in business.
Yeah, absolutely. Ben Lichtenstein, take us through the chart for Las Vegas Sands.
I'd have to agree, Nicole. The buzz in the background definitely brings me back, Alan, to say the least. LVS, as Alan mentioned, has done very well over the last few days. A nice rally from the lows we saw last week, Friday, around 34.40 up to 43.46. I'm sorry, 2 weeks ago. Or a week ago now, Friday here, so 2 weeks ago basically. But you can see the run up here again over the last couple weeks and the bid activity. Alan mentioned how we're breaking out of range here, and notice here that follow through so far kind of limited, I guess, right? We'd be looking for a real high conviction, screaming higher type move, but we're still holding up above 41, so at this upper level, and we're looking back here all the way to the beginning of April, how this was a key area that the bulls had been kind of struggling to get up above this $40, $41 level. They had found support around 28, so again, this is an attempt to break out to the upside here, so we're looking for, as I mentioned here, higher highs and higher lows, and while the 4-hour doesn't necessarily show that real high conviction trade, look at what the daily has here. Again, a series of, 3 days worth of higher highs, higher lows, still have a bit of a hurdle up above here around 45 if this move continues. Ultimately, you've got the highs from this year up around 48 to contend with, but yeah, I'd have to agree. A nice move up in line with what we've seen off the lows from earlier this spring. We've seen a series of higher lows coming into play, trending to the upside. I think this is important right now for them to focus on that next hurdle, 45. 40 was the first breakout level. I always talk about how that's not as significant as spending some time above and forming an area of value above. In this instance, I think these are the 2 next hurdles that the bulls should focus on, though.
Right, understood. So you do have that move to the upside. You're betting on that momentum, Alan?
Right, and if it gets to that 45 level, then that technical target 50 is in play. And most importantly, it's the strategy as much as the stock. This in-the-money option will be worth, will gain about 50% if we get to that level. So it's a limited risk play. It's like being long from 35, which is an important support point to lean on. So that's a play in a momentum stock for once for me.
And what is the whole Macau story or the reopening story or pent-up demand? I mean, is that some of your play too when you think about fundamentals?
Well, I'm just getting the feeling that things are starting to get back to near normal. I mean, just here in the city, it's starting to feel that way. It's starting to feel that way around the country. And, this stock was at, $80, not so long ago back, so I think there's room for recovery here, and I think it's a normalization. The house always wins, and it looks like that's going to happen again.
It's fun to see the branding back there with the CBO, right? I always say CBOE because at the New York Stock Exchange, it's NYSE. They can't stand when it's called the NYSE. So don't call it the NYSE. You can say SIBO, but you can't say NYSE, folks. Okay, let's just get the lingo straight. Can we move on to oil here and look at Marathon Oil? When we see oil at 88.54 the barrel, we've been watching some of these oil names. Alan, your thoughts on Marathon?
Well, again, to go back to the test and reject that Ben loves to look at technically, it failed twice to break out on the downside as far as the crude oil complex there. So now we're back inside that range once again, and it's been the strongest sector in the markets over the last year. Obviously, energy's making a comeback here. So I'm looking at MRO. This is a stock that's been between 20 and 30 since February. So that target's 40 on a breakout here. So the midpoint is what I'm leaning on, the midpoint 25 level here. There's still upside in the energy complex. And to get back to what I forgot to mention at the open here, we had another weekly key reversal in the dollar index last week. So that's very positive for the markets, very positive for commodities, very positive for stocks. If it can build on that dollar dive, that's what helps out commodities. So I'm looking at the January 23 call. It's trading for about 6. The market's at about 27.5, so it's $4.50 in the money. Expiration break even $1.50 away. And if it could get to that 40 level, which is the technical target, then this option would be worth more than double what it is now. So never say never when it comes to a commodity stock. There's always price pop potential, and who knows what could happen with oil here.
I mean, we've certainly seen a turnaround of late. What do you think of the chart here, Ben?
I think we are seeing prices pop right now, and I've got my eye on a couple, a key level right now that we're at, a pivotal area. We'll show you why. I'll show you exactly what I'm talking about on the daily time frame. First and foremost, so just let's take a very similar look as we had with LVS, just an intraday look at the last week or so, the run-up we've seen from 21 in this instance to just shy of 28. Further step back from the hourly and bringing a little bit more time into this chart. You can see that move that we just looked at from, again, 21 up to 28. You can see how, well, this is part of a bigger picture range that we've been in basically since the beginning of August. Alan mentioned a couple tests at this lower level, and this is what I've got my eye on right now. This is a retest of the September highs, basically the August highs as well, and 28's key. Here you can see why on the daily time frame. Trend environment higher. Recent tests of the lower extreme, which failed. Working our way right back into the middle of this range here. So you want to see strength at this point if you're bullish this stock right now. Through the middle opens up a door for a retest. Alan's got his eye on 40. Got to get through 33 first, Alan. That's that high that we saw back earlier this spring into May, late May into June. And that's the level if we do take out 28, 29 that they have their sights set on. So I think this is encouraging for the bulls to see this higher low coming into play. We held above the July lows. So again, strong compared to the broader market as far as what we've seen in the S&Ps, the NASDAQ, and the Dow. Now the heavy lifting comes into play through the middle of this range again is a good bullish sign and opens up a door for a retest of that $33, $34 level.
All right, so it sounds like he's giving you a little bit of leeway here. Could you guys be, agreeing? Is that possible? Alan, tell us more about your thoughts on Marathon. Final thoughts here.
Well, again, you've got to be bullish on the commodities complex. You've got to be bullish on the oil just based upon the global issues. There's always potential that anything could happen. Obviously, we just saw OPEC is just starting to, turn the screws a little bit. But I will also say this is a stock that's been above its 200-day moving average, which is an important technical hurdle. It's been above that for most of the year since that breakout in February. So you can look at that. This is a powerful stock. It's pulled back a bit, as has oil, but that just has given us another opportunity, I think, in the strongest sector that we've seen this year.
Yeah, understood. Okay. Last but not least, totally different, and this is Lucid, as we've seen some of these EV makers gaining and exciting and, subsidies and the wave of the future. In the meantime, you're looking at Lucid, talking about a bullish divergence bottom. Tell me a little bit about what your trade is and how you're going about this, Alan.
All right, this is different. Now, Ben needs to just step back and listen to me for a minute on this one. This was buying when it looks bad enough to be bought. So this stock has been between 15 and 20 for 5 full months. It's got heavy short interest of about 25% or so, and that's been increasing. Now, what for me as a technical trader, we've seen bullish divergence, meaning it made new lows, but it did not make new highs. in implied volatility, a sign that the short sellers are running out of strength. This was a $50 stock in November. So it's about risk reward, bullish divergence, short squeeze, a lot of things. But most importantly, it's about limited risk. Okay, the January 10 call, I think the low on this stock is like 13. The January 10, I don't think it's ever been down to 10. The January 10 call, deep in the money. I have no problem being long this stock from $10. Is trading for about 5.25 or so. It's deep in the money, so my expiration break even is only 75 cents higher. I'm looking for just a modest move. The first stop on this is a breakout, is a move to the 1750, which is the midpoint of this 5-month range, and then to the top edge of the trading range at 20. But then if that happens, there's a the breakout target is 25. So there's a lot of potential, and I know I'm a potential trader. Ben's not. And so potential means it just hasn't happened yet. That doesn't mean it's not going to happen. It just hasn't happened yet.
Okay, you spent a long time selling the trade, Ben.
Well, that's why I ultimately revert back to price. I think it's king, and I think there's a lot of bulls that are sitting around saying exactly what Alan just talked about, how it hasn't happened yet for shares of LCID. Just let's begin with the more granular intraday time frame. Bit of a bid coming back into play, but we're already kind of losing some of that momentum we saw to the upside rolling over here. Again, with the broader market faring pretty well today. Look at Lucid down 3.5% as we speak. So off that high we saw earlier this week, ran up from 1352 to 1568 and kind of right back into the middle of the range. So not a lot of information here. Just wanted to point out that this stock isn't really doing as well as others that we looked at. Now, Alan mentioned some of the range-bound price activity. Alan, we haven't been below 13. You were right. That is the low. We retested it recently, if you remember. It came down to this level to begin the month of October. And
bounce.
As mentioned here, just kind of chop. Not a lot of directional conviction. You can see the range Alan's dialed in on, 18 to 13. He was talking about how it's been in this range for months. You can see that on the daily time frame. And kind of also what I'm talking about here in this instance, how, again, investors have been waiting, the longs have been waiting for this one to rebound. It hasn't. What concerns me here, guys, is in this range that we're forming right now, again, we're going all the way back to the middle of April. We're talking 22 to the upside, 13 to the downside. We just recently rallied up to this $17, $18 level and failed to get anything going. That's the middle of this area. Remember, I always talk about the significance of, because even if you're in a bearish scenario where, again, we're talking about a trend environment to the downside, if you can get through the middle after, in this instance, it was a higher low, failed attempt to break down below the May lows, well, that would have been bullish. We would have potentially opened up a door for a retest at 22, but the fact that we rolled over in line with the trend that we've been seeing just shows me that the bulls are not in control at this point, and it seems like, again, the waiting being the hardest part here, but also hanging out near these lows has probably investors a little bit uneasy. Breakout below ultimately would be a bit of a concern. I can see what Alan's talking about willing to own this one down around 10 ultimately, but again, this chart here suggesting that we could possibly see that lower level at this point.
The frustration is how long we've been in that range. You know, you made the point of how it went all the way back to April, and you try to make the move higher, it moves higher, but can't do it. In the meantime, I'm seeing F-150 Lightning. The price went up 52,000 now from 47,000. So in the world of electric vehicles, this F-150 is still hot. Tell me about the Lucid final thoughts here, Alan.
Well, I think it's part of the macro theory that, I think the overall market, we had a 15% sell-off since the earnings essentially ended on August 15th. And we've got earnings coming up again. So that could give us a little macro push. We had a test read and reject of the S&P, and we're back nearly to that 3,900 level, which is the halfway point, which had been an important pivot in the overall market. So looking at Lucid, like I've said, it's a high-end product, but the demand for high-end products continue, and I don't see, this negativity where the market is that some companies are too hot, selling too many things at too high a prices. I don't see that as a negative, the fact is interest rates are still ridiculously historically low. It's not free anymore. Money's not free like it was for 10 years, but it's still low in historical context. So I remain optimistic across the board. Ben, I got him 2 out of 3 with me today. That's probably the best I've ever done.
2 out of 3 ain't bad. Okay. Alan Nuckman, bullseyeoption.com. Ben Lichtenstein, thank you both very, very much. I always enjoy the big three. I'm so glad you're both a part of it all the time. Thank you. Coming up next, we're going to spotlight social media stocks. Of course, Elon Musk says he will go ahead with his original takeover bid of Twitter, but could there still be some holdups there? And what's next for the rest of the group? CFRA's Angelo Zeno is standing by. He'll tell us all that we need to know. Trading 360 continues.